So hello, how's everybody doing? So I hope we're all having a great day. This is 50 pips as usual, 28/04/2014. Not making any trade calls or recommendations. Everybody's responsible for their own trades. The fact that you're listening to this means you've read, you understand, you accept all the disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis for educational purposes in a learning context, right guys? So what's going on, what's going on? 50's alive, just about. It's been a hard couple of days, but slowly getting there. Still not in top shape. We'll see what happens. We'll do as much as we can of the webinar today. I'm confident we could do at least 45 minutes, but let's hope it's okay. Thanks, guys. Thank you for all the get well wishes. If anybody sent me an email today, again, I haven't really been catching up on everything because it's still recovering. But what I'm going to do is I'm going to try and record a first part here for the YouTube video just to give a bit of an outlook what's going on, and then we'll get back into all those open trades and stuff we're looking at. But again, if anybody has any question on anything, just shoot. We'll try and cover it, okay? So what's happening? I think going here into the open, key is going to be on euro and cable, of course, into those resistances which are holding. You know, they're both fairly extended, so we'll get back to those, but there's some interesting setups on there. So what's going on? Just let's look at ES. ES, basically what we discussed last week is we're talking about the fact that we expected it to have set a fairly strong base right here. And we had all that series of positive daily closes, and we said you have to respect this, and what this was pointing was for a move back into 1850s, and as long as we held above those 1850s, we expected to see a stab at 1887s, and that we would only be interested in fading failures ahead of those or at those, right? So we had that whole rotation up and we held here, and then towards the end of the week, also with the geopolitical news on, we started to roll back down. So we got a bunch of data out this week. Should see a lot of movement, right? Don't think today's it, right? Because basically today's fairly dead. We do have pending home sales coming out in a bit, but still the focus is going to be further down in the week. Not only we have, you know, a couple of central banks speaking, etc., but you know, BOC, BOJ, etc. But really the focus is going to be towards the end of the week, and you know, when we have the FOMC statement. And again, I think get your helmets on ready for that, because that's a potential big mover. Then we also have non-farm payrolls this week, on Friday, right? So there's clearly a lot of event risk, and don't forget all the Ukraine stuff in the background. So look at this as the range is still the same, right? We're still in 1900, 1850, 1800, and that 1850 is pivotal. So as long as we don't get daily closes below, we'd expect to see presses to the upside, and if we start getting daily closes below, we'd expect to see presses to the downside. But and as long as we're in range, you know, the odds tend to favor fading the extremes, right? Any reaction at the extreme of the range, whether that's breakout, breakdown, or a hold of range. But again, don't forget, this is the pivotal level. Not a lot has changed there. Pretty much held the support we thought was good for back into highs. Now we'll have to see what happens this week. Not surprising, as we said, gold, we didn't expect to see any severe weakness on gold, and we still expect to see buyers coming in. We're more in favor of buying than selling here, especially with all the geopolitical risk. And we took that little dip, and once again, you see just clears some stops in light chop action. Massive shout out to Miss Gold as usual. We clear some stops here. Everybody gets excited, but really doesn't find any traction. Bam, closes back positive. We're back above the 200 day. So again, keep in mind a lot of geopolitical risk. This 1300 and the 200 DMA are going to be pivotal. The range is the same, 1350, 1300, 1250. As long as we hold above, we'd expect to see a stab back into the 1350. We expect it to have fairly decent support, especially due to all the geopolitical concerns as well. Okay. What else have we got up here, which is interesting? Aussie. We talked about Aussie, and we said that 1933s were pivotal, and we're looking for action around that, but we'd prefer to engage at the extremes. And right here, it's holding below, right? So look at this previous support that is now acting as resistance. So as long as this holds and we can't get a daily close back above 93.30s, right, we'd expect this to continue to edge its way back down and move back into that 200 DMA, that 9160, 9170 range, okay? Yeah, cables prints new highs. I mean, I think it's going to be interesting, especially keeping an eye on the 1 hours and the 4 hours today. We'll get to cable in a second. Um, One thing that's interesting, clearly cable holding a bid tone, keeping an eye on a GPBAUD. We discussed those into this as a potential base low for a resumed move to the upside, at least back into this descending trend line. GPBNZD. We discussed this 2 weeks ago too in the outlook. We said, watch this. This is a potential start of the next big move. And again, you know, Rob's, we've been saying all day, you know, it's low odds to fade a dull market, right? Especially something like cable that's been holding very, very strong bid. There will likely be an interesting time today to fade, but, you know, we'll talk about that in a sec. What else is happening here on Kiwi? NZD USD, we're holding here into the support. So clearly this is opening the room for a move back down into those two moving averages, into that 100 or 200. If we break below the support zone, this is a massively important support zone. As long as it holds, expect this to continue to try and take a step to the upside. But here, at least as we trade here, it clearly looks at risk of holding heavy, trying to break lower and move at least back into that 100. Euro JPY, still in line with what we discussed, that 141 remains pivotal, remains key. And right here, we're still inside the zone, but heads up for a break, daily close outside of our support zone or chop zone here. We'd expect it to aggressively try and test those 143s, 143.50s, but don't be fooled. The same way we discussed it to the downside, unless we break outside this range, it's still a range trade, okay? You know what we always say about a level. A level's a level until it's broken, right? No matter how under pressure it may seem to be. USD CAD, not a lot going on. It's still stuck here. You know, we've seen this a lot with CAD. There's times where we trade it very actively because it's clearly moving, and then there's just times like Euro GPB where it's not the center of attention, and we just don't waste any of our brain power or pips on it. We let it get into the get it moving again, and then we'll be back interested in it. USD JPY, again, still those longs, although it's paid very nicely, it's still hovering here. Let's see what happened in a second. We'll look at our trading chart once I cut the recording for the YouTube video. What's going on Euro? Euro, we discussed about all this range here into these lows, pointing that we still had support inside the chop range, and we'd expect it to go and fill that gap. I call, you know, as far as I'm concerned, that gap is filled, done and dusted here. So big question is, what's happening today, right? Clearly, if you're long in this kind of market, you can try and be aggressive and see if you can catch a bit more of a squeeze. But if you're flat, the last thing you want to do is get long at highs. I mean, you can do whatever you want, of course, but the odds simply where we're standing here in terms of position on the day of you getting long here for an intraday trade, probably be able to get a better price tomorrow if that's really what you want to do. But for me, the focus here, at least intraday, is either riding longs, tightening up stops, or being very selective on tactical shorts. And we'll look at that again in a second. I have a position open too. We'll review that in a sec. And cable, what's going on cable? So cable, you know, we discussed this. We had that trade from the other day. I mean, that's done. So bat for a move, double hold here, that aggressive move, then the aggressive TP back into those highs. That's pretty much done. Right now, what we're doing is we're still hovering, right? And we're around that 68.50. That's not a surprising level because we talked about that 68.50 a lot, right? And what did we say? That's where a lot of the shorts were holding, and it would be very interesting to see if we actually got a stop hunt if we took that level out. But you see what's happening here? Not really, okay? Not really. At this point, similar to Euro or Euro, no matter how bullish we may be on this, you know, the risk reward is simply not for getting long right here. So we'd be looking at more tactical plays. We'll discuss that in a second. But keep in mind, still hovering at highs, not finding any selling pressure. We do have data coming out in a bit. That'll be interesting to keep an eye out. But it's still looking bid, right? It's still holding bid, no change. Still moving quite nicely. So again, really, unless we see this trading back below those 67.40s, no change for us, right? We're still looking for this to continue to move up in extensions. And remember what we talked about, you know, long completed, extended into the new high, this front run. We looked at this for that move back into those 68.90s and those 69.90s, and that is completely still in play. Remember, this is that aggressive candle close we used for the swing longs. And again, you know, those are still in play. We'll talk about trails and strategy in a sec. But for those, for the moves higher, that still remains 123 extension, 69 here, or 69.90s, right? Some people will be looking at this as this move, right? Still that candle. So that gives you 68.80s, but still, see all the retracements are holding. It's still pointing to more upside here, okay? So, thanks for listening. If anybody enjoys the content, don't be shy about sharing it. Hope this was interesting and useful. And again, I'll stop the recording here for the YouTube and we'll get into some of the trading charts, guys.